EPR Properties. Ticker symbol is EPR. It's currently trading for $42 per share. Pays a dividend every month, which is always nice. The last one I received was for 23 cents per share and has a current dividend yield of a nice 8%. Now, from their website, you can see quite a lot of very useful information, and it's always nice to see a good website with a good bit of effort put into it. But I've learned a few things while researching this company, and the main one being what an experiential REIT is. Now, a REIT, an REIT, is a real estate investment trust, and an experiential real estate investment trust is taken from the word experience. So theme parks, water parks, movie theaters, all that good stuff. So it's plenty of useful information here. See the investing and asset management, the nice investor presentation, annual reports, all the usual stuff that you'd like to see. Dividend section, which is always nice if this is the kind of game that you're into. But I'll leave that for when you're doing your own research, and I'll just give you the basics. So EPR is a diversified experiential net lease real estate investment trust. So experiential, as I said, is fun. You know, water parks, go-karts, and net lease means that the tenants pay the expenses involved in the business. So the insurance, the tax, the maintenance. EPR are kind of the hands-off owners of these businesses. And instead of reading word for word the description as I usually do, I'll kind of break it down into more understandable and, more importantly, much faster version. So it has two segments, which are experiential and education. And the experiential, or the fun time segment, has 175 movie theaters, 56 eat and play properties, 18 attraction properties like theme parks, 11 ski properties, 8 experiential lodging properties. They have a gaming one, 3 cultural ones, and 7 fitness and wellness properties. And the education segment, as you've probably guessed, it consists of education type properties, mainly 65 early childhood education centres and 9 private schools. And you can find their investment portfolio and their assets on the website, but here it says that their portfolio includes ownership of and long-term mortgages on these properties. They have investments in about 44 states in the USA, and all of the company's owned single-tenant properties are leased under long-term triple net leases, which means the tenant pays everything. EPR don't get a bill saying, oh, you have to fix this, or one of the pools is leaking, what are we supposed to do? That's on the property itself. EPR just owns the property. So at the moment, their debt is good, the dividend is once every month, and it's 8% yield at the moment. It's always nice, and their profits are good. So they're based in Kansas City. They're in the services sector and the real estate operations industry. They've got a market cap of $3.11 billion, a PE ratio of 84.44, a revenue of $500 million, $531.6 million, positive earnings per share of 49 cents, and a lovely dividend yield of 7.95%. So having a look at their profits recently, according to Trading 212, annual profit margin is 18.55%, which is nice. And over the last quarter is even better, 25.5%. And that's with a revenue of $160.5 million, and a net income of $40.91 million. Over the last year, their total assets summed up to $5.8 billion. The total liabilities summed up to $3.18 billion. And their debt to assets ratio is about 55%, which is actually not that bad. Over the last quarter is about the same, 55%. And having 55% debt, if you're kind of new to dividend investing, it might sound pretty detrimental, but just for the interest of research, I will show you someone like McDonald's. Massive company, not going anywhere anytime soon. And their debt is 108%. Yeah, it's pretty staggering. But there's something new for you. If you see a company that's 50% in debt, it's actually doing quite well. So EPR was founded in 1997. And this long-term graph goes back to 1997, so we get the full scale of what's been going on. And we get a good bit of history. Here is, I think the dot-com bubble was in 2000, so that's the bottom of it, I think. And it actually grew in the years afterwards. And here we have 2008, the subprime mortgage crash. Down we go. And up here, we have lockdown. Down we go. So if it recovers to where it was before lockdown, We're talking $55. Oh, in kind of a low point. But as you can see, even when these disasters happen, they have a way of just rebuilding. And if they're an experiential real estate, so theme parks, water parks, that's devastation when everything is closed. It's like what happened to Disney. Disney had to close all their parks all over the world. Massive chunk of revenue gone. And then they stopped paying dividends. Well, it's suspended. I do have faith that they will bring them back. So EPR has a 52-week high of $56.38 and a 52-week low of $40.68. So it's getting close to the cheapest it's been in a year, which is always nice. Going back into EPR Properties dividend history, this actually goes back to 1997, which is when they were founded, all the way up. And back then, they used to pay every quarter. So they'd pay 4 times a year, which is actually quite common, that companies that are doing very well and will pay quarterly dividends will eventually bump it up to monthly. It's the dream that you would have held a stock to pay it every quarter and then all of a sudden it's paying every month. But it looks to be steadily growing since then. Very nice. So you have 2008, it was paying 84 cents per share, and then 2009 it was paying 65. So that was after the subprime mortgages crash. I'd assume that they had to kind of reduce things down a little bit. There's also a massive drop in 2013. So they either had a very unprofitable time, or they had something called a stock split, which is where they turn one share that you have into 2 or into 5 or into 20, or it's up to them. They decide how much, but when that happens, if you have one share and it turns into 2, each of those shares will be worth half as much because you have twice as many, and the dividend generally is reduced by the same amount. So you end up with the same dividend received and the same value of your investment, but it makes room for new investors. Say there was a split today, they don't say, oh, $42 is too expensive for me, I can't buy a share. They'll see $21. And if you were in EPR before the split, you end up with twice as much shares, but they're worth half as much. So it's a bit of dilution. But anyway, growing very steadily. Always nice to see. And by quite a bit as well. Generally, companies that pay every month, they won't really raise it by a huge amount each time. That's in my own experience anyway. I could be wrong, but it seems to be very healthily growing. I do like the sound of that business model though, where the tenants pay everything. Just EPR owns the property, but the tenants kind of have all the baggage that's involved with it. So to summarize, EPR Properties pays every month, $42 per share. It's founded in 1997, and they claim to be the leading experiential real estate investment trust for the last 20 years. So, very exciting. I do like the look of these. I've had them for quite a while, but I haven't really looked into them too deeply until doing this review. But I like what I see, to be honest. So, if owning real estate or a real estate investment trust is something that you're interested in, this could be one for you. And it's a unique one as well. Skis, attractions, experiential lodging, gaming, fitness and wellness. It's an interesting one. And also, if anybody knows any other real estate investment trusts that are similar to this one, quite unique, I'd appreciate it if you let me know so I can have a look into them. And I hope that you found this useful.